Hey, investors, welcome to the show. We discuss real estate investing and building wealth. I have an awesome interview with Tom Washburn that I'm about to introduce in a second, but I wanted to tell you guys what we're actually going to discuss on this interview. So, Tom has 4 years of real estate investing experience. Prior to that, owned multiple businesses. He has approximately 10 rentals or closing in on 10 rental portfolio. He's done multiple flips and he's mainly focused in the residential asset class, localized in Baltimore. But we're going to go in depth on Baltimore real estate, how to get started in scaling your portfolio like Tom did, what a good deal looks like for Tom. We're also going to talk about returns that he's getting. I really want to take a deep dive into investing in slightly rougher areas where you can still get high returns and how, with a recent example, Tom did this. I also want to discuss best areas to invest in Baltimore right now and his biggest learning lessons, challenges that he's having today. So welcome to the show, Tom Washburn. How are you?
Good morning.
Yeah, good morning. Would you mind just giving the audience a bit of, and just briefly, a bit of your background and how you got to purchase your first property?
Sort of had a couple of businesses, and then with COVID, we closed one down and was looking for something to do and decided to sort of get in real estate. I could do it on my own and look around. So it took a while to find properties and sort of learn as much as I can beforehand. My first property was a 4-unit large house over near Belvedere Square, and it was fully rented, a little run down, and probably paid too much for it in the condition it was in. But that's just something you learn. But
Mhm.
it's a great location, and so I've made a bunch of renovations over the years as tenants have moved out. But it's something you learn, and maybe it's not a home run or a double or a triple, but I think in the long run, it's just a great area, and I think investment will be safe. So
Yeah. And I mean, do you live in Baltimore? Why Baltimore right off the bat?
I live in Towson. It just, Baltimore is my home. So I grew up here. I would say that I know it, but as I drive around town, I really don't know it. I sort of know the reputation of certain areas, but when you drive around, you're like, your eyes are wide open. You're sort of learning. So,
Yeah.
and I self-manage. So that's the other thing, is I figured I would self-manage, learn the process of what it takes dealing with tenants and issues and construction. And so I just like to do it all. So
Gotcha. That first multi-unit property that you purchased, did you rent it out by the room? You said did you say it was a 4 unit?
4 apartments.
4 apartments.
Yeah, so it's an old large house that had been cut up to 4 apartments, and so it came fully rented. And so just as tenants moved out, we went in and sort of fixed up the kitchens and bathrooms and whatever needed to be done. The building was pretty shoddy, so we fixed some of that. And it's been great so far, but it's been sort of a cash suck right now. But now it's fully renovated and great, and have some awesome tenants in there. So.
Yeah. And are you renting that out to students? You renting that out to long term
No, these
to
are all professionals, mostly single or couples, just need a nice place to stay in a great neighborhood. So,
Yeah. I love that Belvedere Square area. That was one of the first areas that I discovered when I started investing in Baltimore. Had no idea about it. Went over to Belvedere Square, to Atwater's, I think, Atwater's
mhm.
and the market, and it's very super unique to Baltimore, and it's an awesome place. So, and you purchased that, was that, you said you feel like you overpaid. And I know you've figured it out now that turnovers are expensive. So what was the purchase price for that property, and when did you exactly purchase it?
um, I think I paid around 300 for it.
Mhm.
The end of, what was it, 21 maybe? I would have to look that up. But with everything you walk through a house and it looks great, and then once you buy it and you own it, you're like, hey, wait a minute, I missed the fact that the electric panels were way out of date, and maybe some mechanical things need to be upgraded. So we had an oil furnace in there that I was paying for all 4 units, and window ACs, and I put some mini splits in just to let the tenants control their own AC and
Mhm.
heat. So it's one of those things. If I had known what I know now when I was looking at the property, I would have been a little smarter in probably the price adjustment that I would want.
Yeah.
And maybe I wouldn't have bought it because the seller would have been like, no, thank you. There's someone else who'll pay what I'm asking. So it's just a live and learn type of thing. It wasn't anything critical to kill the deal or I'll never make any money type of thing. It's just some things that I missed that now when I walk through a house, I'm much more attentive to.
Yeah, and would you have done anything different there? Would you have gotten an inspection? Would you, or is this one of those things that as you purchase properties, you just become more seasoned and know exactly what to look for when you're walking through the property?
We had it inspected and things were pointed out, but I think it's the learning curve, right? I mean, if you're a new investor, there's a ton that you don't know. But the trick is to make sure you're not rushing in and make a critical mistake. So there are some mistakes you can make that are just things that you miss. It's not a big deal. If you're just way overpaying and there's no way you'll ever be able to make any money, that's what you're trying to prevent. But as a first time investor, at some point you just got to say, I got to do it, and it looks okay and it's not so expensive that it's going to crush me if I miss something on it.
Yeah.
Um, and certainly you want to, friend up with people who are in the business and pick brains, but it's inevitable you're going to miss something in every deal. Like that's just what it is. So you really can't help hold yourself up on you moving forward. Just because you'll never know everything, right? So you just need
Yeah.
to live and learn and be like, okay, maybe I broke even on that deal. Maybe I lost a couple $1,000s, but I wasn't so stupid that I was chasing something and now I'm taking $100,000 write off. I mean, you really have to sort of do it first and learn and then maybe scale up. So you do something small that you can handle, right? So
Yeah, I mean, I think a great learning lesson that you're sharing there is that, I mean, just getting your foot in the door, just getting started is almost better than nothing, because if you didn't purchase that first property, maybe you don't purchase the second property, and it really just starts starting your education and everything. I think we really get caught up in trying to make everything a home run. Like everything has to be a home run. And sometimes that can be our worst enemy. I think the saying is perfect is the worst enemy of good, or good is the worst enemy of perfect. I mean, it's basically trying to overanalyze everything instead of just saying, hey, this is going to be a single, this is going to be a double, it's going to work. And then keep learning and you get better and better and better as you go, instead of just not starting at all. I think that's where a lot of people get stuck, is they just don't start, or they say, oh man, that panel is a little bit rough. How much is that going to cost? And maybe it's the unknowns that people really struggle with. And then as you progress as an investor, those unknowns aren't unknown anymore. You say, well, I mean, I know if the panel goes bad, I have to replace it. If I want to replace mini splits, I know they're going to be $3,500 a pop. And then so you don't have these unknowns, and you really have known issues that you can choose to do or choose to not do. I mean, would you agree
yeah,
with that, or?
yeah. I mean, at some point, yeah. I mean, just find a good enough deal and go do it because you'll learn so much. And if you're going to have tenants, you got to ramp up to learn how to negotiate with the tenant and be that kind of landlord where when the phone rings, you're able to answer and have a solution. I mean, it's the learning curve is going to be a lot, but you got to be all in. And you're right, it's never going to be perfect. It's even if you think it's perfect, you miss something. So you're fooling yourself anyway. So, or
Yeah.
things will happen. Like it's just, you're not going to buy a deal and just collect checks and there's nothing else to do. Like there's always something you got to be figuring out. So
So it's not a passive investment. Is that what
no
you're saying? Because I've
no
been
such
told real estate's passive investments.
no such thing as passive. You
Yeah.
gotta be all in, or your team has got to be all in, or you got to have people who are all in to run your stuff. I mean, it's just you got to be on top of it. It's the old saying where if you get a phone call and something's wrong and you put it off, the next time you're going to get the phone call about it, it's a lot worse, right?
Yeah.
So you missed your easy chance just to go fix it because you're like, oh, it's fine. But then the next time you get that phone call about the same thing, it's a disaster, and it's probably Friday night, and you're about to walk out the door on your date night. So you got to
Yeah.
deal with it.
And for that first property, and it's also tough when you have tenants in a property, you're gonna see a lot less. There's a much big difference between walking through a vacant property and walking through a property that's fully occupied, that's got all the tenants' stuff in there. You're going to not see the walls, and there's just no way to actually see all that stuff. You did do an amazing thing and get an inspection, which was in a really tough time to have inspections during COVID, where it was just a seller's market. So that was an awesome job and a good takeaway. How did you purchase that first property? Did you purchase all cash? Did you get a hard money loan? What did that first one look like?
We did cash, and then we got bank financing later. So
Okay.
yeah, that just came later. But
And you did a conventional bank financing? Did you do a DSCR loan? What did that bank financing look like later?
I think what I did originally is I purchased it in my personal name, and then I had to move it into a LLC to get the DSCR loan.
Gotcha.
And so that took a while, but that was just, again, live and learn and talking to people and trying to figure out what made the most sense of how I should have done it initially. But that's a live and learn. It, again, not a deal killer, but it's just something that you figure out as you go along. So
Yeah, I mean, you took action. So congrats on taking action and just taking that first step, purchasing the first property. Even if you purchase it in your own name, I mean, most of that conventional wisdom is going to be, hey, do not purchase a property in your own name due to liabilities. But sometimes we get in our own way and we get overwhelmed saying, well, I can't purchase it in my own name. Like I could have the worst thing that ever happened to me. Where that's not the norm, is that something terrible is going to happen and you have it in your own name. Do you purchase in under LLCs, or what's your process now?
yeah, everything now is a LLC with the intention of a DSCR loan.
Okay.
I've sort of overcomplicated it. I have too many LLCs for the few things that I have, but it's fine. Like I'm not worried about it. I'm not going to be opening any more LLCs. I'll just have more properties in there, and at some point you'll just say, hey, it's you have too many and too much risk. Let's just contain it. But again, it's I've talked to lawyers and stuff, and just having an LLC is not the end all be all. It's you have to have the right insurance, and you have to be the good landlord who's taking care of issues, because if you're negligent, it doesn't really matter, right? So the last thing you want is something that was your fault to happen at your property because you were just too lazy to deal with it. So it all comes to what kind of landlord you're going to be, right? You have good insurance, you're taking care of the properties, you have it in an LLC, and if God forbid something happens, it's limited to the LLC at some point. But if you're negligent, all bets are off and you're in trouble anyway. So
Yeah, lawyers have a way to find a way around things. There's no perfect end all be all protection that shields you from everything. And just so the audience knows, DSCR loan, a lot of newer investors don't know what this is. This is debt service coverage ratio, is what that DSCR loan is. We have videos on the channel about it that you can go take a deeper dive into how that works. But that is a strategy that I myself use, and that I noticed that a lot of successful investors utilize that strategy to get a 30-year fixed loan, especially if they're using hard money or private capital, or even if they're using their own money, like Tom, purchasing the property and then refinancing it out into this 30-year fix so you can get some of that money back, use leverage, and then put it on the next one. So then was that right? Did you want to say anything
no,
there?
no, that's sorry. That's great. But the benefit of the DSCR loan is that it treats your business as a commercial business, and you have to have enough rent to cover your principal, interest, taxes, insurance. And so to get the coverage ratio 1.25 or whatever, you got to show that this house or whatever you're about to buy can generate the income to pay the debt. And so you can't willy nilly buy a $500,000 house and charge $1,000 a month in rent and be like, well, I'm not even making any money. Like
Yeah.
it forces you to do the math and treat it like the business that it is, right? You want your house to be able to cover the debt. Maybe it appreciates over time, which is the hope, but at the bare minimum, you don't want to be shocked that you're having to write a check for $500 every month to your first investment.
That's a terrific point, and sometimes I just completely skip over that. But it's definitely, I mean, this is for cash flowing properties. So the DSCR loan is for cash flowing properties. It's not for properties that don't make profit each month, that are cash drains. You won't actually be able to get that loan. And then so you'll be stuck in the property if you purchase in cash or stuck in hard money, God forbid. But yeah, that's a great point. Thank you for sharing that. As you purchased your next property or your next couple, do those look similar? Were those then in LLCs and then refinanced out with DSCR? How did those look like? Were those townhouses? Did you stay in multifamily there?
No, of course I don't do anything the same. So I I found a row home in Handon of all places and
Uh,
negotiated with the wholesaler, and it was a non-conforming 2-unit row house that the first floor tenant had been there forever and was absolutely disgusting, and he had moved out, or no, he was about to move out, and the second floor tenant was nice and clean and but non-conforming. So we renovated the whole thing down to the studs, converted it back to a single family, and then rented it out. And so that was my lesson in renovation and that process. So that again during COVID, I hired a contractor that I met through real estate networks, and me not knowing enough, it just took forever. I mean, they took a long time. They do a lot of properties, so I felt like I was sort of the third stop in everyone's day of them coming to my property and doing stuff. So, but they got it done, did a great job. It just took forever. Like and it was COVID. So you can't, and stuff was hard to get and you're waiting for things, and it's a challenging time for workers to be out there. So it
yeah.
is what it is, but that's just, again, a great area. I probably paid way too much and spent way too much on the renovation, but it's rented out and it's doing fine. And, it's probably in a neighborhood that at that level, it probably makes more sense for me just to go ahead and sell it than try to rent it. But I've been holding on to it and I'll figure out something. So I'm not really worried about it. It's,
Is it,
great neighborhood.
is it cash flow positive?
It's cash flow positive because I don't have any debt on it, so I had
Gotcha.
self-financed that myself. But I've been toying around. It's one of those things you look at it and you're like, it doesn't really make sense for me to put debt on it. It makes more sense for me just to sell it and put that cash to work somewhere else.
Yeah, I talk about return on equity a lot, and it really comes down to I know that's fancy words, but it comes down to capital deployment of where you're putting your money. Like, would you put your money in a townhouse that makes you 4% cash flow, or would you just put in a high yield savings account for 4%? I mean, one
Right.
one is zero work and is passive, and one is work and there's a little bit more risk. There is some upside, but definitely it sounds like you're starting to get to the point where you're thinking a little bit about capital deployment and like, hey, where should this money be? It could be in houses, it could be somewhere else, it could be in mutual funds. So are you just continuing on this path of property, cash, refinance out with DSCR if it makes sense, and then you go on and do the next one with basically recycling that capital?
Yeah.
Is that the path you've been on?
Everything else has been bought with DSCR money, and my money, so my deposit, right, or my down payment. So,
Mhm.
but yeah, so it's just learning how it all works and flows together. So, and there's no rhyme or reason. It's just more opportunities of places that I bought a place that I thought made sense financially, and sort of learning as I go.
Mhm.
And I have a property, and I'm spread out, unfortunately. So I have a property in Overlea. I have a property in Dundalk, and it's just driven because someone showed me something that looked really good, and I was like, "That looks great." It's just a pain to manage because you're jumping around. So, but that's just the way it is. But once you get them stabilized and get a great tenant in there, it's not like I have to visit every week or whatever. I mean, I
Yeah.
talk to the tenants. If there's an issue, we deal with it. Send a vendor over to fix something, but I just wish they were closer together. Just would make my life a little easier. But
Yeah, I get that. I'll give you a different lens that I look at it. So we have properties that are I just say shotgunned around the city, and I really enjoy it because it forces me when I'm purchasing a property to go to different areas in the city. And so having kind of no perspective of Baltimore until I start investing there, it forces me to go through different areas to get to these different properties. And so I actually think it's been a great thing to have them all over the city. It is nice to have multiple properties in the area. And I find that investors, as they invest, start purchasing all in the same demographic. They'll purchase a bunch on the same street. I purchased a bunch on the same street in different areas because they get really comfortable with what the rents are, how the neighborhood feels. And so it's almost like a comforting thing to be like, all right, well, yeah, I'll purchase on that street all day long or you get a home run and you just really love the street. But I also think that if you do have them all over the place, there is a benefit there of forcing you, if you're doing the hands-on stuff, to really go through other areas and maybe uncover kind of like a diamond in the rough area where you're like, man, nobody's investing over here, but I really like it.
No, I agree with that. I mean, you're from out of state. I'm from Baltimore, and I have the same issue, is that my preconception of certain neighborhoods is just wrong. I mean, I don't mind hopping in my truck and driving to look at a house that a wholesaler is showing or whatever that I'm interested in. And you drive around, you're like, wait a minute, this street is booming. Like, things are happening. Like, people are renovating houses. It looks great. Like, I thought it was going to be the dumps, and it really is. Investors are coming in here and making things happen, and you don't get that on Google Street View. I mean, it's just you got to go and look. And I don't. Every time I drive to a neighborhood, I'm just amazed that I didn't know about it. Right? So it's you got to live and learn. You got to get out and look. Like, and a lot going on in the city. So
agreed. I mean, it also just goes back to the fact that you need to have a really good team or a really good realtor. You can do it yourself or have somebody that you trust that knows the area, or you can network with other people and say, just like yourself, hey, Tom, how does 21st Street look? Are you investing over there? I completely agree. You also have to be careful on the other side of like, hey, all of a sudden there's drug dealers on this block that weren't here before. And so sometimes a good drive by look at a different time of day gives you a new perspective and go, I don't know if I want to invest in this block. It looks like there's a lot of activity, drugs, whatever. Sometimes it's drug users that are, they frequent one street. Maybe the block looks okay, but they walk down. I know there's certain areas in Pigtown where I've driven through and I'm like, man, the drug users just walk down the street. Like, I like the area, I like the location. I wouldn't want to be a tenant and have all these users just walking down my block in front of my house, especially if I have kids. That would be a problem for me. So that's one of the reasons why I stay away from certain areas of Pigtown where I'm just like, I don't want to deal with it. I know the tenants that I have would want to deal with it. But I think the learning lesson is have a great team, right? Either yourself or somebody else.
Yeah. I mean, you gotta listen. You gotta get out and go see everything, right? And listen to what people are saying. If you said to me, hey, Tom, look at this area. Okay, great. You said, look at this area, but I need to get myself down there and drive around some and just get comfortable with the area myself. So
yeah, some of my best, most, I don't know. I don't even know. Best is subjective. Some of my most profitable properties have been in a zip code that another investor that had more properties than I did ran a big real estate meetup. I chatted with after one meetup, and he was like, "You're an idiot for buying this location." And I was like, "Oh man, I am a dum-dum." And those ended up being amazing properties that I made rents that I ended up selling a couple of them recently. I still have properties in the zip code, but it goes on that point of even people that are like seasoned that might be ahead of you in the game of investing. If they're blanketing a zip code, and it goes back to this actually rule. If you don't blanket zip codes, I mean, Baltimore, you just can't blanket the zip code. There can be a pocket in the zip code that's amazing. And if you find that pocket, you've uncovered a diamond in the rough. And you can do that like you do driving, or, if you have somebody that's always driving around. If you have a really good realtor that's always driving the areas, they might know those pockets in that zip code. And they'll say, yep, that's a great pocket. What is your buy box, or what does a good deal look like for you in Baltimore right now? What are you searching for?
Well, right now I'm sort of focusing on trying to do some flips in the $200,000 range, just because it's something that I can do, take it on and renovate it. Most of them are complete renovations, and then hopefully sell it fairly quickly. So it hits that price point where great entry point for someone who wants to buy a house fully renovated and everything is working. But it's the challenge of finding the right thing in the neighborhoods where you can do that kind of work and get the value out of the house.
When you say 200K flips, are you talking about after repair value?
Oh yeah. So yeah, selling price
in the somewhere in the 200s.
Yeah.
Okay. I mean, that's important. So you're talking about maybe purchasing for 110, putting 50 in and selling for 220.
I've put a lot more in. So, um,
Okay. I mean,
yeah.
what
So,
yeah, what is that what is a normal, like, what is that normal purchase price and renovation and then ARV look like? And ARV is after repair value, what you're looking to sell the property for those that are listening that might not know that term.
so purchase price, I'm really looking for around 50,000.
Okay.
And these are houses that are just old and just need to be taken down to the studs. And we're probably putting $100,000 in. We're doing everything. I mean, it's new electric, new plumbing, new HVAC, fixing roofs, new layouts if we need to. You know, a lot of all these old row houses have walk-through bathrooms to get to the back bedroom type of thing, and we're reconfiguring to make it more logical.
Yeah.
Dealing with basement issues, so it's a laundry list. But when we walk out of there, it's been done right. So
Yeah.
it's been tempted to maybe keep them because I know the house has been rebuilt from ground up almost. So, but right now I'm just looking to do the flips and keep renovating and selling them and do the next one. So
Gotcha. So you're all in for somewhere around like 150 and then you're selling for 200 or low 200s?
yeah, but there's carrying costs and other things.
And so what's your what's your normal or ideal profit that you're looking for to say, "Hey,
uh,
I'm gonna purchase this flip," or "No, I'm gonna pass because it doesn't meet my profit threshold."
I think 15 to 20,000 is my goal, but that's a goal. And like I said, every time you buy a house, you think you got it down and you're going to miss something. So maybe it's a little less if I miss something or I had a longer carry cost or something, but that's the goal, right? So and again, it's something that's small enough that, a $200,000 house should sell. And if I miss and let's say I missed all my profit, I wasted my time, but I got my money out, and I'll just go to the next one, right? So it's to me, I sleep at night knowing that I I'm not missing something huge, right? I'm not going to miss.
Yeah.
Maybe I won't make the money that I make, or I walk away, or maybe I lose a couple $1,000s, but I'm not buying $4 million houses, and I missed a $500,000 profit that I was banking on. So it's just all scale. Now, will I do bigger deals as I get more under my belt? Probably, but we'll see. I mean, but it just depends on sourcing, right? If I can find these deals, I'll keep doing them. If I can't find them that make sense, then maybe I'll move to a different price point.
Yeah. Is in your current strategy, what do you think is the best strategy for Baltimore? Is it flips? It sounds like your current strategy is focused on flips. Do you think that's the best
Well,
strategy, or do you think rentals are a better strategy?
I think it depends on what you as an investor needs. If you're looking to generate the money from the flip, and you can get it out, and you don't want to have tenants, then yeah, that's good for you. If you are able to buy these same things at the same price points and you can renovate them when you want to rent them out, and you could DSCR loan them after you're done with the tenant in there, then yeah, then do that. That might be great. It just depends on your own strategy if you want the tenants or not, or if you want to get the cash up front, or if I rented them out and had a tenant in there, then maybe I have to leave some money in the deal, and I'm not going to get all my money back, but I'll get most of it back and just do the next thing. So it just depends on what your goal is as an investor.
Gotcha. You're just talking about your capital needs. So if you need capital, then you're flipping. And if you don't need the capital, then you're more likely to purchase a rental, keep it, and just get a low cash flow each month and possibly leave some money in the property. Am I tracking correctly?
Yeah, yeah. I
Okay.
mean, a lot of these neighborhoods, they're in transitions, right? So it's if you want to ride it out for the turnaround or the growth of these neighborhoods, there's a lot of these neighborhoods have vacant homes on them, and I know the city is talking about trying to, speed up the renovation of them, but until that happens, they're blights to the neighborhood and hold down the property values. So
There's nothing fast about Baltimore city government. I'm going to go ahead and throw that one out there. Take it as you will, be offended as you will, but there is nothing fast with Baltimore city government. You just have to know kind of the right people in the government because but no, I appreciate you sharing. What are the best areas that you're investing in right now? What do you see promise in?
I have a couple things in 21218, the Cold Spring Homestead Montebello area. I still like the 4x4 neighborhood that I did my first flip in.
Hmm.
But I've been looking around, in the city just all over. So it just goes back to, can you buy the property for the right price? And that, you see a lot of wholesale deals, and it's a complete gut job, and they're like, oh yeah, it's $25,000 worth of work, and you're like, what, to replace the door? Like, it's unrealistic, right? So a lot of stuff I'm seeing is just the prices are just crazy and just don't make sense, because I'm taking the risk to go in there and renovate and find something that needs to be fixed, or have to sit on it for a longer period of time, or whatever. Or the neighborhood is just tough. Like, it's tough you might have the most beautiful house in the block, but everything else is a vacant dump next to you. So it's a challenge. So it really is driven by the purchase price of, is the seller being realistic of what they can sell it for, given how much work needs to be done.
So I have some questions right there. I want to push you just a little bit more on if there's any other areas that you like in Baltimore City, Baltimore County, that you're like, man, I really like these areas. Other than 4x4 and Cold Spring, Montebello. Unfortunately, I don't speak in zip codes.
Okay.
But I know that most Baltimore local investors speak in zip code. So I really appreciate you sharing like 21218, and then you actually say the name, because it's much easier for people to look it up on the map. But what other areas that you're like, man, I've driven by this area and I kind of like it, kind of feeling like this could be a great area.
Um, I don't know if I have areas per se right now, but I would
Mhm.
say when you drive around, you can see houses that are large enough that look like, if it renovated, a family would love to live there, type of thing. And it may
Mhm.
be sort of rough neighborhoods, and it's hard to get your hands around it. And yeah, maybe it's dumpy now, but with the right push and investors coming in, the houses are large enough. I mean,
When you say that, I think Galloway, I think Hanlon Park. I don't even know. It's down Reisterstown Road. That area is what I think. These huge single families that are gorgeous, that can actually sell for, and they have a big upside. Is that what you're talking about when you're speaking about that like
yeah,
huge house?
you look at, Baltimore has a challenging history of, it's an old city. Redlining was certainly a thing. People were in houses they couldn't afford, and it became dilapidated, and it's, all these things, but the infrastructure is there. I mean, if you drive down Broadway, it's a double lane road with these beautiful 3-story brick homes. North Avenue, as I know you have your property there. I mean, if you just sort of drove around and forget the history and look at these houses, you're like, wow, these are gorgeous. Like, these would be a great house. Or all these row homes that are large enough. It may be in a terrible area right now and it's run down, but the potential is there. You don't want to be the Indian with the arrows in your back, but if you see other investors doing what you think should be done and it's happening, then that's sort of exciting.
Yeah.
And
No, I like
with
you sharing that area.
yeah, so it's just, you drive around town and you see these houses, you're like, okay, this is a large enough house that we could renovate and a family would love to live here. There are some tiny, tiny row homes. I don't know how they get rented out. They're like almost studio row homes, and on tiny little back alley streets and whatever, but that's is what it is. And maybe they can be renovated and you can do enough work there and get your money out. But the infrastructure is there. So it's just whether or not the willpower to renovate and fix these neighborhoods is your tailwind, right? That's you got to come in when things are happening.
Yeah, there's a big worry. One of my biggest worries when I started investing in Baltimore was it has such a big inventory of housing, has a huge inventory of housing that is not renovated. And so I was always worried, like, if investors come in and renovate all these houses, supply is going to go up. You're going to get crushed in rental rates. And that was a huge worry that actually kept me from investing in Baltimore for a real long time. And then I just was contrarian the last time I came to Baltimore and was like, you know what? Every investor is, if investors think like me, they're going to be just as scared as me when they drive down and go, wow, look at all these board ups, look at all this inventory that's just sitting there. And then when I started investing, I actually started to understand it a little bit more, where a lot of these properties, you can't renovate them. They're not even worth $1. So they're never going to get renovated. They're going to have to get demolished unless everything around them gets renovated. They're worth nothing. So you don't have to worry about somebody coming in and spending $100 or $150,000 to renovate them. It just doesn't, because the value isn't there. And so that was one big like takeaway that I got from investing in Baltimore, of just like, hey, there's a supply there, but the prices are so depressed that those houses are not worth even if taking for free. If somebody were to give them to you, they're not worth it. So that was a big takeaway for me for these different areas. But also what you're alluding to that I really like was that some of these areas that have beautiful, huge houses, you can't build a new property for what it costs to purchase the house. So you actually have a little protection. You have a little shielding in there of you purchase this really nice house. Well, guess what? Nobody can build anything new that comes close to the cost. If they do, it might even cost double, and they'll be selling like a really nice row home for $400,000 when you picked it up for $200,000. So you're insulating yourself also with that supply there, where people can't just build. So I found that to be kind of eye-opening to me once I started investing, going, even if other investors are still coming in, that the supply is not all of a sudden going to go through the roof. And I've actually seen that in the numbers. If you look around in places like Florida and in places like Texas, inventory has gone through the roof. But then if you look at Baltimore, it hasn't. It's stayed steady. It's like a 3 or 4% increase in housing each year instead of a 15 or 25% increase. There's my soapbox.
Well, I mean, any new build in the city is probably going to be multifamily for it to pencil out. They're not going to be able to build these row homes at this level. I mean, that's just, it can be renovated, and the city needs to sort of, they need to make it happen and stop making excuses, right? So they need to push through the vacant housing clearance. Like it takes a while. There's court cases. It's got to go through the courts to clear liens and all that kind of stuff. But the city has got to be behind it and stop making excuses. I mean, they're the reason it's just sitting there. They got to get proactive and they got to push it through. And you drive through these neighborhoods, and it's 3 row homes in a row, then grass, 3 more row homes in a row, and then whatever. But those were houses at one point that were so dilapidated, the city said, we're just going to tear them down and rip them out. I mean, at some point, that whole block was a continuous row home block. They can't come in and fill those green spaces in for what they're selling for right now. I mean, it's just,
no,
you can't build them. So I totally agree with you. I mean, if you can find these houses that need the work, you can jump in now but your bet is the city is going to keep fixing things up and making it better, and your value down the road will appreciate, right? So the city has got to, and the mayor and the council have got to make it happen and stop coming up with excuses of why it is what it is. I don't know what the number is, 13,000, 17,000 vacant homes in the city. Like at some point, you got to get aggressive and clear that out and make it places for your citizens to live, right? Or rent. So
yeah, I mean, the only scary thing, the statistics show that Baltimore City's population's been on decline. Baltimore Metro's population has increased, but there's definitely been a trend that people have been moving out of the city and into the surrounding county areas.
yeah, I mean, the argument really is the city and the state need to work on the job side, because you attract jobs, it puts puts pressure on housing stock, and then people figure out how to renovate these houses, right? You
Yeah.
can't renovate houses and create jobs out of thin air. We gotta get the job growth back up. So, and that will put the pressure on renovating these houses and getting them rented out or sold to homeowners.
I wanted to shift focus to the 4x4, and I'll highlight it. I'll have the video editor put up a map of the 4x4 so you can see exactly what the 4x4 is. It's just a 4x4 block square section off of Bel Air Road.
Yep, Bel Air Road. Yep.
Bel Air Road, right past the cemetery. That if you're in a real estate investment group in Baltimore, you'll hear people say it's a bad area, it's not a great area. You succeeded in doing a flip in the 4x4, and I think that's awesome. I was a bit doubtful. I'm glad you succeeded, because I would be nervous, but can you just walk us through like your purchase price, how the flip went, and what you made on the property? As I think some people that are really scared about investing in bad areas, I think this is a great example of you can make money on anywhere. You just have to buy right.
Yeah, so that was my first flip. So my contractor that I've been using for my other houses, my rentals, had a friend who owned this property and had it rented out years ago. I don't know what happened, but he didn't have a tenant in there. They moved out, and then he had squatters in there, and he had to get them evicted, and he was just done with it. He was just so sick of the whole thing, and I think he may not have been paying attention to his rental, and that's why it just sort of declined. But my contractor approached me and said, "Hey, I have this friend who wants to sell this," and then I'm like, "That's not really the neighborhood I know," and I'll go look at it. And my contractor's like, "Look, you buy it, I'll fix it up, and then we'll get it sold, and it'll be fine." And I'm like, "Okay, I'm game. Let's go."
It'll be fun, he said.
It'll
It'll
be
be fun.
fun. So yeah, it's right off of Bel Air Road. It's again, it's a challenging neighborhood. You walk up and down the street, there's older folks who live there forever and have tidy little yards and doing the right thing. And then you have houses that are vacant and dilapidated, and you have in between, some people who just don't take care of their property. So
And
it's
so you went over to this property with the contractor to visit it?
yeah, yeah.
Okay.
We walked through, and as you would expect, it was a disaster. I remember I walked through and I got home, and then I'm like, oh, I didn't take any pictures because it just gave me the heebie-jeebies walking through this place for the first time, because I'm thinking, okay, some guy's going to be lying there in his bed and drugged out, right? So,
Mhm.
but no, it was complete dump and full of trash, what you expect. And we're like, okay, let's see how this goes. Did I know what I'm doing? No. Like it's
And then,
it's
so purchase price, the friend of the contractor was asking how much for this property?
so I offered 50,000, and the guy's like, Sign me up right away. Like I want to get rid of this so fast. I'm just so sick of my experience with it.
Then you probably second guessed yourself. You said, "Dang, I should
I
offer
know,
like
I
35,000."
know.
And then this was, how many bedrooms, how many baths?
Three, three, two. There was actually a full bathroom in the basement.
Okay.
Um, and yeah, so
3-level townhouse?
well, two, and then the basement.
2 in
So
the
three
basement.
level, yeah, but
How many square feet you think?
probably 1,000,
Okay, so
eleven
smaller
hundred.
house.
Yeah, 1,000, I think it was.
Got and walkout basement or below grade?
Below grade, had stairs up, so like a cellar door out the
Okay,
back.
okay.
But my contractor is the one who really kind of talked me into it. He's like, "Yeah, let's do it. Don't worry about it." And
He doesn't have any bias or anything, Tom. There's no
no,
bias. He's not gonna
yeah,
make any money from the renovation.
he says, "Tom, bring your checkbook. You're good. This will be great." No, it's a contract. Again, a contractor that I have a lot of faith in. He does a lot of work for me already. So, and I went in there like, look, even if I make $1, it'll be a great learning experience, and you'll learn from it and decide if it's for you or not for you.
Yeah.
Again, you just don't know. You can do the pen and paper and sort of think what you can get, and I did that. I mean, I thought, okay, if we buy for 50, we put 100 whatever in it, and we sell for 200. There's enough leeway that we'll be all right if we screw up or we have overruns or whatever. So, but again, you gotta. If you don't try, you're never gonna
Yeah,
you
you
know,
gotta take action. I agree.
learn. You're never gonna learn, right? So
Yeah.
there's a lot. My contractors like this and that, and we got it, and
So you
like
were thinking, and I'm sorry, I'm breaking you up a little bit. You were
no.
thinking, "Hey, I could possibly sell this property for 200,000."
That was the goal. It
That was
it
the
made
goal. Okay,
sense.
so
I saw some other sales in the area that gave me
in that
confidence that, okay, we could do that.
in that 4 by 4?
And the 4 by 4, yeah.
Okay.
But until you actually get it sold, you never know, right? So
It's always the
you're
nerve.
hoping that the past sales and what's for sale currently are gonna help you sort of justify where your math on this, but you have to be willing to go in that I might make $1
And this was
and
a full gut renovation that you were
full
doing?
gut down to the
Okay,
studs,
everything. So this is
everything.
like 100, you spent like 100K, or did you
100,
spend like
yeah,
85? You
yeah,
spent
a little
100?
over 100. But the house was gorgeous. I think it took us 2 weeks to sell it when it was all said and done. I hired a realtor that had sold other houses in the neighborhood for this one because I figured she would know the deal. Like she would know. She's been through it before, of the challenges of the 4 by 4 and getting buyers and their bank financing lined up and all that kind of stuff. So she sort of guided me through what needed to be done and helped us, came in and saw it and made some comments, but it
And
was great.
she sold it in 2 weeks?
I
Or
think it
got
was
it
like
under
2
I'm
weeks.
sorry,
Yeah,
got it
got
under
our
contract.
contract in 2 weeks, yeah.
Okay. And
So,
then it went to closing at 30 days from there or
yeah,
so?
it was, yeah, 30 days. There was no issues.
And so what was your profit margin on it? How much did you make on that flip?
We made, I don't know, 17,000 on that.
Okay. Do you have holding costs there?
Yeah, there were some holding costs.
Real estate commissions, some other stuff.
Yeah, I mean, there's always, it's
Okay.
insurance, BG&E, water expenses that come out. Yeah,
And when you say 17K, is that gross or is that net after tax?
gross, gross.
Gross.
Yeah,
Okay. Okay.
yeah.
Okay. And this was I mean, congratulations on that. That's something to be super proud of. You flipped a house in the 4x4. You helped out, you know, your contractor's friend. You made some money
Yeah.
and you made some money in one of the tougher areas in Baltimore. I mean, I'm sure it's not the toughest, but when you say 4x4 around people, most people are just going to say, I'm not investing there ever. That is going to be your common response. That's kind of the way I feel about it. If I take a look at an address, I'm not sure what it is, and I see it in the 4x4, a lot of times I just write it off. But this goes to show you that there is money to be made there, and you successfully did it in there. What was there any learning lessons there for you for investing in kind of like, did you feel like it was a kind of a tough area?
Oh yeah, you drive around and
You getting stared
um,
at?
there have been some days when I was over there just checking on things and things are happening outside and you're just shaking your head going, wow, okay. People screaming at each other, or we had some break-ins. That's just part of it. I mean, or attempted break-ins. It's just that's the neighborhood. Like you can't. It's not. It's not easy. So yeah, it's a hassle, but it's probably house by house if it's a deal or not. If I probably wouldn't do it next to a vacant house unless that was being renovated.
Okay. So this property was next to like some decent ones that you could tell like people are taking care of the yard and stuff.
Yeah, on either side of us, there were either long-term tenants or homeowners who were there. I mean, they weren't thrilled with us making all sorts of noise and stuff, but I'm
Mhm.
sure they were happy that this house that had a squatter in it before, probably causing all sorts of issues in the middle of the night, was getting cleaned up and turned over to a homeowner. So, but yeah, so that's, you have to be aware of if there are other vacants that are not being dealt with next to you or near you, that's going to hurt your ARV, and the lenders aren't really thrilled with that. So
Yeah.
it's not you know we made 17,000, we struck lightning and wherever, but I would do it again, but I would be very selective house by house, right?
You
So
heard it here. You got properties in the 4x4, in the $50,000 range, and they're decent houses on both sides. You send them over to Tom Washburn. He
well
is
I've
ready to take it on.
yeah, well, I've seen some houses sell since then and go for a lot more than I would have been willing to pay for.
Yeah.
And I just scratched I haven't been in these houses, so I don't know how much renovation is required, but you have to be able to pick it up for the right amount to do the work you need to do to get the ARV. You can't just come into these houses and paint them and expect to get that kind of turnaround. So,
How this is a common question that I get from investors. How are you doing your estimate on like knowing that it's going to be 100K rehab? How are you doing that? Is that a contractor that goes in there that gives you that quote? Is that kind of a gut feel of like, hey, I know how much a gut rehab costs and we're going to do everything. And it's right around 100. How are you doing that?
I'll go in with my contractor, and it depends. I don't want to waste his time for a property I'm just looking at. So, I'll go in and I'll know I can look at it pretty quickly. And most of these houses, needs a complete gut renovation, which is why I'm looking at them. Like if they're the more challenging houses that everyone else doesn't want to deal with. So I have sort of numbers in my head of what it's going to take, but usually for those types of size houses, I walk in thinking it's 100,000 and plus or minus show me something different, right? You're
Hmm.
not going to find a perfectly good electric panel in these houses. You're not going to find a perfectly good HVAC system in them, or maybe we're putting in the HVAC because it was an old oil furnace or something. So most likely it's got to be new kitchens, new bathrooms, maybe you need to put in a bathroom or a half bathroom somewhere. So, I want the house to sell right away. I don't want it to be a disaster renovation that's going to sit for 6 months. And I see those. You see them on the MLS all the time of poor renovations that you just question, like, what are you thinking asking that price for that kind of work?
Yeah. I mean, if you guys have stayed this long, I'm going to give Tom a few more questions that are what I think the most powerful ones out of this entire interview. So, congratulations on staying the longest. What were your biggest challenges, or what are your biggest challenges currently? It doesn't have to be on that 4x4 product. What do you think is like your biggest challenge in real estate investing in Baltimore?
Well, finding the property for the right price. I mean, and having the fortitude to offer what you think is the right price. Don't worry about what someone says. This house is for sale for $90,000. You just say, look, I'll take it for 50. And if you get it, great. If not, you avoided a $40,000 mistake, right? So, and then having a good contractor that you can count on, that knows what you like, that can go do it. You're all on the same page, and then getting it sold. I mean, it's just once you do your work, or getting it rented, like whatever your end goal is. But
And the biggest challenge that you've run into is, I mean, it sounds like you sold the property pretty quickly. I mean, I'd say that's not a challenge for you right now.
well, we
Always a
lucked out.
worry.
Yeah, we lucked out. I have another one for sale that we just finished over in the Cold Spring area I was talking about, and
Mhm.
it's November, the end of middle was it November 21st. So it's not the best looking for a house type of time of the calendar year, but we did a great job. So I think it'll sell when people start seeing it. So it's all going to be a challenge. Nothing is going to be easy, but finding the properties for the right price. There's a lot of properties for sale
Okay.
probably are not reflective of what the true selling price should be. Like at some point, I know they want to get top dollar for their sale, but I need to make sure that there's enough cushion for me to come in and renovate and not lose my shirt.
Is there anything in specific you do when you do that offer? I know you said kind of stick to your guns. If we want to sum it up, of like, hey, this is what you think the renovation is going to be. Is there anything you do, like send over, like, hey, contractor says this house needs $100,000 of work? Is there anything special you do when you do that offer?
Well, so I go backwards, right? So I look at a neighborhood and I want to see what has sold, and I do my ARV calculation first. A
Hmm.
lot of these houses don't have square footage information on the state site, so
Yep.
you're sort of guessing what roughly this square footage is, but you need to see the sales of what's been sold or is for sale. Take those with a grain of salt because they can be marked down. But I do that first, and then I back out what I think my renovation costs would be. I mean, I'll obviously walk through the property and try to find some things that just make sure I have enough things on my list that I've protected myself on a renovation budget, and then deduct my profit, and then carrying cost, and then that's sort of my offer price of how much I would be willing to pay for something. So a lot of it is, I wouldn't say wasted effort, because every time you do that, you learn a little bit about a neighborhood. So the next time you might find something nearby, you have a handle on it.
Hmm.
Um, but that sort of tells you where the selling price really should be, or my buying price would be. You
Yeah.
got to go backwards.
Yeah, you gave a very simplistic model. Sometimes we overcomplicate it, but you work on your comparables. Then you take a look at how much the renovation is going to cost. Then you add in your carrying costs, and then you add in the profit that you want to make, and that's how you determine your offer. I mean,
Yeah, I mean, it's just
summed up.
that's the only way, because the ARV is sort of driving. I can't sell a house for $250,000 if the sales prices in the neighborhood next door are 200. Like, it's hard to justify, or you're taking a huge risk by adding some fancy amenity that you're hoping the buyer is going to spend $50,000 more for.
So that is a huge and great point that you're making. I mean, the ARV is super important for new investors. ARV is super important because it's going to determine how much money the bank will lend the borrower. This is why it's important. Now, I also think that this is an awesome thing that people don't think about, is that you can have depressed areas that a bunch of houses have sold for cheap. So then you can come in, purchase them for cheap. You're going to have to hold them because you're a lot of times not going to be able to sell for huge because of the comps. But you can also look at it the opposite lens. Man, a lot of these houses are selling for cheap. It doesn't actually make sense that they're this cheap. So I'm going to come in. I know people can't come in and get loans on these properties for 250,000, what I think they could be. And I know you're playing a little bit of speculative game there, but if you're comfortable with the neighborhood, you're comfortable with the location, and it's just that the one hindering fact can be that comparable sales are low. And a lot of times that can creep up over time. But if you're getting like ample rent, that's okay. You kind of you pivot and go, hey, this could be really awesome in the future. I actually think about that a decent amount of like, man, these ARVs are really low over here, but I really like this area. I'm going to get a smoking deal. And I think in the future, I'll be able to sell them for what the market should be, but it almost artificially depresses the price because a few properties sold for low. Does that make sense?
Yeah, I mean, the ARV or the rent numbers that you can get in an area. I mean, that's almost like you're selling the house, right? I mean, if you're keeping it as a rental, you're showing the rent number you can get. It then justifies the whole math equation of, yeah, it's worth me doing this, and I can back out to where I need to be for my purchase price and just
Yeah.
wait, right? And wait. So maybe I would never sell that rental because it's such a great rental in a growing neighborhood. And eventually maybe at some point a neighborhood will outgrow the rental equation, right? So the housing values are so high, like my Pandem property, it probably just makes more sense for homeowners to own it than for me to try to get the rent that I would really need to get my 1% rule or whatever, right? So, which I'm not getting. I'm
Well,
not getting.
it's just because investors, it's homeowners, and they're willing to pay more, and they're not looking at the property as necessarily an investment. They're looking at it to live in it.
Right. It
So they're
becomes
willing
very
to,
desirable.
yeah, to push those prices up.
Yeah.
And you're working the supply demand curve in Hamden where there's only so many properties. So if you want to live there, you either pay the price or pay higher than the price. It just is what it is. In other areas, there's, a bunch of vacants. You don't have to necessarily have that supply demand factor. One of the last questions I want to ask, I mean, what is your team? I mean, people throw around the term team really often. Is there one or two like team members that you found that were like grossly important to you?
Well, my contractor is probably I don't know, he's probably my most important team member because, when I call him and I need him, he's there. And, even if it's something breaks the rental, he can shoot over there and get it fixed, or I'm traveling or whatever. And I get him paid as fast as possible. So, but he and I know how each other works, what we expect. I don't have to explain every little thing to him, and I don't bother him. He does his thing and I do mine, and we're on the same page. So I would say he's my most important guy because, he gets it done when I need things fixed.
Yeah.
And we speak the same language. Like it's hard. Like you have to have that sort of trust built up with experience with someone, right? So, I've used other contractors before, and great people, but maybe not the best business people, and maybe can't really manage the budget as much. So, you got to make sure uh, the numbers that you thought you're going to make or spend on a property is really what it is. So,
Is there anybody in Baltimore, like a team member that, let's say you're a newer investor? I mean, I hold contractors close to the chest, so I'm not expecting this. But is there another team member that maybe you've dealt with, whether it's a title company, whether it's an insurance agent, whether it's a lender, that a newer investor coming to Baltimore, you could recommend out to say, hey, if you're a newer investor, this person has been super helpful and in my growth, and you could reach out to this person?
no.
No, okay.
No, I would say if you're a new investor and you're trying to do what we're doing, is you need to go to these meetups or the luncheons or whatever, and talk, because you need to talk with as many people as possible. Sure, you want to ask me and I think you're legit, I can share who it is. If you're a tire kicker and you're wasting time, then I don't want you calling my vendors. Like, I need to know that you're for real and going to get things and try and move. Don't waste time. You need to get out there and do it. So,
Is there one real estate investment group in particular that you're like, hey, I've gotten value, or there's a lot of information that you can gather from this site?
Well, the Maryland Investor Network on Facebook. There's your Facebook page or group. There are some others. I mean, it's again how much time you're willing to put into it. There's so much information on there that can be searched. It's always annoying to see a new investor ask some silly question that has been answered or asked 1,000 times, and it just shows they haven't done any sort of effort to look things up and introduce yourselves. Like go introduce yourself to people and talk to them. And we're a friendly group, but you need to make the effort, right? So you need to go out there and try to learn, but you need to be serious about what you're doing. Like you and I don't mind talking to people, but you and I also don't have time to answer questions that someone's going to ask, and you're like, well, wait a minute, you clearly haven't done any sort of your own work and effort. So I know that's
I
not
think
really a nice answer, but
no,
it,
no, that's okay. I mean, one of the goals for this kind of video series is kind of providing one resource or something, and you kind of working it forward. So for each like major market, I want to provide a resource for people, and so they can channel somewhere. Maryland Investors Network is a good resource. Nothing's foolproof, guys. So even if you're on Maryland Investor Network, people are biased, and so even though they're saying, hey, you have like husbands and wives that are recommending each other, and obviously there's a bias there.
right.
And so it doesn't necessarily mean that contractor's good at all or that the lender is good at all because their wife is saying, hey, this is the best contractor ever. And then you like research, you're like, wait a second, this is like their business partner. Like this
Right.
is not
Yeah.
a unbiased review. This is just this is marketing in essence. So you just have to be a little bit careful there instead of just going with the throwing caution in the wind and saying, hey, I trust everything that people say on here. You do have to kind of dive deep. The last question that I have for you, Tom, I also want to give you, actually, before I do, I also want to give you kudos. People have imposter syndrome. And I've seen this in myself. I've also seen this in you. Sometimes you're like, oh, I don't got a lot going on. I haven't done a lot. You've done more than probably 99% of the people in real estate, maybe even higher than that, purchasing properties, taking action, moving forward. And it's super important. I mean, I mentioned early on before we started this interview that I wanted to hit on this. It's not important to the amount of doors that you have, whether you have 50, whether you have 10, whether you have 2. It's really that, you're getting better and that you're running kind of an efficient operation. There's a lot of people that have, I don't want to say a lot. There's people that have a lot of doors and we go, man, I'm so far behind, but they're really not making money or they end up going bankrupt. And so the goal is not necessarily to get the most amount of doors. The goal is to build wealth. And doors doesn't always equate to wealth, even though we think of it as investors. Just make sure when people say, hey, I have X number of doors, don't think of it as like, oh man, that person's doing way better than me. That's not actually what it means. It just means they have more doors. Actually, it could be they could have way higher of a headache. But I've also seen you at different workshops, at different meetup stuff. You've come out to some of the meetups that I've hosted at like rental properties. And so you are doing what I think is the number one best skill in real estate, which is building relationships. It gets you ahead of everything else because you can ask questions, you can ask for recommendations. So I just wanted to give kudos to you. Even though you have so many properties, you're still learning consistently, which we all should be doing. Even if we have 1,000 units, we should be learning. So kudos to you.
Well, thank you. It's not again, but it's never what you think it is, right? So you'll have to learn every time and accept and talk about sort of what you missed and screwed up, right? So I could say I have 1,000 doors and it makes X dollars a year, but it's never going to be that easy. There's a lot of ups and downs and mistakes made, and you got to be willing. That's part of it. So
we either win or we learn. There are no mistakes. There is no failing. We either win or we learn. I mean,
right.
if you want to look at it in that lens, but I do find, I mean, it's just so everybody know, there's on a daily basis, I'll like learn something new or develop a new contact over at the Baltimore City Water Department and be like, wow, I wish I would have known this a
Yeah.
year and a half ago. And so even if you are, maybe ahead in the season of investing, there's still daily learning lessons, even for people that have been doing it for a while. It's just so. we can learn from everybody. And last, is there any tools or systems that you use that have you found like helpful?
Well, for my own properties, I use a software system called Buildium just to keep track of my rentals and payments and all that kind of stuff. But I'm a old guy, and I pen and paper and my little notepad, and that's my little handy dandy notepad. I
That's
mean,
right.
that's all I'm doing. Every day I'm looking at something, I'm scratching something down and trying to figure out the math and see if it works. So
Love that. So we use Buildium as well, and I am a big proponent of Buildium. So for those of you that are looking for a platform that you want online rent payments and work order requests for your tenant, Buildium is great. Definitely a great piece of tech. Well, thank you, Tom. I appreciate it. If somebody wants to reach out to you, they have that property that they want to sell you in the 4x4, what is your best contact information? I know I'm shedding light on it and kind of making fun. But I mean, truly, if somebody does have a property in the 4x4 and and they want to reach out to you, what's the best contact information?
my email address is tomwashburn731@gmail.com, and that's probably the easiest way to get hold of me and
I'll
follow
put
up.
it I'll put it in the description of this video.
Okay, great.
Thank you so much, Tom.
Well, thank you.
We'll see you guys on another video.
All right, see you soon.
See ya.